Welcome, guys. So today's episode, this is Melody FS Academy. Um, if this is your first time of coming across this channel, please do well to subscribe to this channel. Okay, so want to sincerely appreciate everyone who has contributed to the growth of this channel so far. Okay, I really appreciate and I'm grateful. But if you are still following us, or if this is your first time, please, and you have not subscribed, please do well to subscribe. Okay, it won't take much of your time, and turn on the notification bell to get notified. Okay, so now in today's episode we are going to be doing the market review. Okay, I'm just going to be doing a market review of what I did this week. Okay, so it's just just a market review. I don't really actually know what to title it. Okay, so I just going to go with market review. Okay, so now, okay, oh sorry. Okay, now so let's get down. Let's continue. So now before we proceed, there's something I put out there. Okay, so if you have been keeping tabs with our community tab, if you have been, viewing the post on our community tab, you might actually be aware of this. Okay, so I'm putting up a 1 month intensive mentorship course. Okay, smart money concepts, advanced price action. Okay, so this is going to be for those that are still struggling with smart money concepts. Okay, those that need one-on-one tutoring. Okay, they need one-on-one mentorship, they need someone to hold their hands and guide them. Okay, so this 1 month program is going to be for you. Okay, but it's not free. Okay, I'm not going to do this for free. Okay, the reason is because most person tends to think their what they tend to take things they pay for really serious. Okay, so by having you to pay a small fee for this, because $30 is not really much. Okay, and trust me, when I am ready to start my mentorship fully, when I'm ready to take on mentorship, this is not actually going to be my class fee. Okay, so I'm just trying to do this to help those that are still struggling, that are new to the concepts, that need one-on-one mentorship on mentoring. Okay, so I'm just hosting this a 1 month program. Okay, so what we are going to learn is not just this syllabus. Okay, we are not only going to cover the syllabus. The idea is that you are going to tell me the areas that you are lagging behind. Okay, the area that you need help on with smart money concepts. Then we are going to tackle it together. You're going to bring your own syllabus and I'm going to bring mine. Okay, so here in this flyer here is some of the few things from my own syllabus that I think is going to be very helpful to you. Okay, so I'm going to teach you how to filter the pairs to trade weekly. I'm going to teach you how to use correlation to your advantage. I'm going to teach you how to determine weekly and daily directional bias. Okay, most people have struggles with this. Okay, so I'm going to teach you in the simplest form, in the simplest way to understand it. Okay, then I'm going to teach you ICT power of 3. We're going to talk about SMT divergence. We're going to talk about top down analysis. Okay, and how to reducing your stop loss and increasing your risk to reward ratio. Okay, in the aspect of risk to reward ratio, when most traders, the when calculating their risk, for me as a trader, the best way I manage my risk is by using this concept of risk to reward ratio. Okay, so any trade, if I'm taking a trade, it's going to be based on a minimum of 3 to 1 risk reward ratio. Okay, that's the minimum kind of trade I like to take most of the time. Okay, so by so doing, with just if you are able to pull off trades that have high risk to reward ratio, okay, that has low risk but high reward ratio, that way you don't really need the accuracy, with just about, let's say, 30% accuracy in terms of your analysis, in terms of your setup, with just 30% success on it, with just 30% rate on your analysis, you are good to go. Okay, you don't really need to have about 70%. You don't need to be right 70% of the time. Okay, but if you are able to pin down setups that have huge risk reward ratio with low risk, trust me, you don't need uh, a high accurate how am I going to put it? You don't need to have a high accuracy in terms of analysis, or I don't just know how to put that, okay, but you are going to understand as we go further into this market review series, okay. So now the telegram sorry, the venue for this class for the mentorship is going to be on our telegram, okay. I'm going to create a private telegram from this, okay. So the class is going to kick off once we have a minimum of 20 students, okay. So and it's going to be more of live trade sessions, and I'm going to record and upload to the group, okay. Then I'm going to be sharing my setups with the students, okay. Then this offer is only valid for this month, okay. So if I don't have, you know, a good number of people turn up for this, I'm just going to take it down after this month, okay. So after this month, I'm not offering mentorship again, okay, until further notice, okay. So I'm not offering mentorship again after this month, okay. You're just going to have to go with what we have on this channel, okay. So the additional concepts to cover is I'm going to talk about how to trade your stop loss to avoid getting stopped out, okay. Then I'm going to talk about re-entries, and I'm going to talk about how to gather more confluence for your setups, okay, etc. More, okay. So but this mentorship is mainly focused on you as a trader, okay. You're going to give me your own syllabus, okay, the areas you are lacking, and I'm going to break mine, and we're going to break join those two together, and trust me, it's going to be an intensive training, okay. So the link to my telegram to join, okay, the link to book your slot is going to be attached to the description box of this video, okay. So kindly click on the link on the description box to join and book your slot, okay. Some students are already making payments, okay. People are already making payments to join, so you might really don't want to miss out on this offer, okay. So it's just like a once in a while kind of offer, okay. So I'm always busy on schedules, okay, but I've decided to use this opportunity to help those that are still struggling, okay. So I believe if you take this mentorship, and by the end of this class, the class is not just going to be in 1 month. Mentorship is not going to just be in 1 month, okay. The class is obviously what is going to last a month, but the guidance continues, okay. The guidance is still ongoing, okay. So I'm going to walk you continuously even after the 1 month, okay. So my mentorship with you does not end within this 1 month time frame, okay, but it's more like continue something, okay. So with that said, let's get down to today's business, okay. So now we're going to be looking at New Zealand USD. We're going to look at New Zealand USD. So I shared this analysis in my telegram group, okay. I shared this analysis in my telegram group, and we all knew that I was bullish this week, okay. We know that I was very much bullish on DSY this week, okay. So now if I'm bullish on DSY, means I'm expecting all other assets that are paired against the dollar to be bearish, right? So this was the level I was expecting the New Zealand USD to be drawn down to, okay. So this was my drawn liquidity level, which is the weekly sell side liquidity, okay. So I'm bearish on the New Zealand dollar, okay. So this is the daily time frame, right? So now let's go down, okay. So now this right here is delineating on Monday's opening candle, okay. So this is on Monday's opening candle on the hourly time frame, okay. So now I want you to study this chart. I want you to pause this video and study this chart and make your own annotations if possible, okay, to see how we pull this off, okay. So or rather to see how I pulled this week's trade off, okay. So you can pause the video and check it to do your own annotations, okay. So now let's go down, let's continue. Okay, so this is on Monday's opening price, right? So I'm bearish for the week on New Zealand dollar. So now when we are bearish, okay, once you have determined your order flow, okay, or your bias in other words, your bias or order flow, they are both the same thing, okay. If you are bearish, you are expecting one of two things, okay. We are expecting a run on buy side liquidity. So once you are bearish, okay, so it all has to start with understanding your bias, your directional bias, okay. directional bias for the week. Okay, so my directional bias for this week was that I was bearish on New Zealand dollar, was bearish on Euro USD, Aussie dollar, GBP USD. Okay, any pair that was paired against the dollar, I was bearish on it. Okay, then I was bullish on the pairs that has the dollar as the base currency. Okay, so now if you are bearish, for the week, you're going to be looking for run on buy side liquidity, okay, to short at or return to a fair value gap. Okay, so we are looking for one of two things: run on liquidity or return to an imbalance. Okay, so now we had this is a Monday opening price, and now you can see we have the previous range from last week. Okay, so we had this displacement. Okay, in the previous episode I talked about the things to look for in each time frame. Okay, I talked about the weekly time frame, what you should do with the weekly time frame, the daily, the 1 hour, the 15 minutes. Okay, I basically talked about it in one of our previous episodes. I believe it should be the drawn liquidity or thereabouts. Okay, but you can check the previous video, is there. I talked about what to do with each time frame. Okay, so now we had a displacement on the hourly time frame from the previous week. Okay, so what do we do with this formation? And in one of our previous episodes, I also talked about the two types of setups that forms every week. Okay, I talked about the counter trade setups and the bias directional setups. Okay, direction setup. Okay, so our directional bias setup, which is the trade that goes in the direction of your intended bias for the week. Then the counter trade is the trade that goes against your intended bias direction, right? So I also made mention that every week the counter trade setup tends to come first before the directional bias setups comes in. Okay, so in this case, the first thing we are going to be seeing is our counter trade setup. Okay, so let's look at how you take your counter trade setups. Now, applying the fib to the previous week range. Okay, previous week range from this high to this low, right? So I'm bearish. In other words, I'm expecting price to run above some kind of old high so that I can go short at. Okay, to short at, I'm going to expect price to run above old highs, run buy side liquidity, then I will short from there and or return to an imbalance. Okay, so now I wanted to study this price action right here. Okay, so we had a range, a high to this low, right? Then above that is going to be premium. Then in the premium, what do you see in the premium? We had a fair value gap right here. Okay, so this is my point of interest to go short at. Okay, is the reason why is that it is in premium and this is displacement, right? So this is expansion, retracement, and we are going to be trying to capitalize on the second retracement expansion that's going to go down, right? So now if this is expansion and we're expecting a retracement, the retracement back up, the retracement should be we will be looking for our sell in the premium. Okay, so we sell at premium and we buy at discount, right? So if this is an expansion and retracement, we are going to try to look for a counter trade setup on the retracement. Okay, so now let's go down. So this is on Monday. This is the opening price right here. Okay, this is the 5-minute chart. You can see we consolidated. Okay, price was just consolidating and we had an expansion. Okay, so if we remember vividly the interbank price delivery algorithm, how it works is that it always starts with consolidation, right? So this is consolidation, expansion, and retracement. Okay, so once we had this displacement upwards, this right here signifies that a large I'm not gonna put it, smart money has just stepped in. Okay, so this is displacement, right? So we had orders building during this consolidation. We had orders building on both sides of this consolidation, right? So we have sell side liquidity resting below here and buy side liquidity resting above here, right? So now price has already shown the willingness to move away from this equilibrium or from this consolidation. So we had consolidation, expansion, retracement. So we are trying to capitalize on this retracement, right? So now what the next thing to do is to add your fib. Okay, so you add your fib in the range from this low to this high. Okay, so we are going to be looking to buy at discount. Okay, so now we start watching for price to drop below the 50% level. Okay, so now as you can see, price dropped below the 50% level. Now there are two types of entries you can do here. Okay, we can either do aggressive entry or a lower time frame confirmation entry. Okay, so we're going to talk about that as we go further. Okay, so let's just go down to our lower time frame, and that's the 1 minute time frame. Okay, so we're going to go down to the 1 minute time frame. Now I didn't, okay, I thought I captured that. Okay, so below the 50% level of this range, from this high to this from this low to this high, which is this range. Okay, there is a 1 minute fair value gap right here. Okay, I thought I captured it, I didn't capture it. Okay, so now as you can see, price was just bearish. It dropped down into that 1 minute time frame below the 50% level, which is discount, right? So price dropped down. Can you see this swing high, right? So we had the price that was very bearish. Okay, then price made a lower low from this swing high. Okay, so this is our new range. Then when price broke this high, that's our shift in market structure up. Okay, so price broke this high, shifted in structure, created this displacement, right? And once we have this, we'll look for our fair value gap, okay, to see if there's a fair value gap there. Okay, so now we have a fair value gap here, and we have another block as well. Okay, so this is confluence. This is referred to as confluence. The more confluence you have in your setup, the more reliable that setup is. Okay, so always look for more confluence to support your idea of on the setups you are looking at. Okay, so in this case, what gave me the confidence that this is going to hold is that or this fair value gap is going to hold, the price is not going to trade through, is that it's because of the fact that we had this other block. Okay, and in the right context, okay, in the right framework, for an uptrend, the down close candle is going to act as support. They are going to act as support level. Okay, so the down close candles. Okay, you should take this down. You should probably write this down. In an uptrend, okay, in a market that's predisposed to go higher, okay, in the right framework. Okay, what do I mean by the right framework? We had a market that was consolidating, right? Then we had an expansion, and we had a retracement right now, so we are expecting another expansion up, right? So for the fact that we had an expansion and this is a retracement, and we are below the midpoint level, which is in discount. Okay, so now in the right, this right here is the market that is in the right framework, in the right context. Okay, so in a market that is in the right context, that is predisposed to go higher, the down close candle should act as support level. They should provide support level. That is what brings about the other block. Okay, so then in a market that's predisposed to go lower, in the right context, in the right framework, up close candles should act as resistance. Okay, that's what brings about the idea of other block. Okay, so now this was my entry right here. So this was so your entry will be your limit order will be below the midpoint, which is discount. Okay, so as price drops in right there, your order gets activated. Then your stop loss will be below the other block, because the other block should act as support level. Okay, so you can see we had a deep move downwards. Okay, in some cases, price may just reach into this fair value gap and without reaching for the other block. Okay, this right here is a proportion candle because it trades into a previous other block. So this is a proportion candle. So most of the cases, price is going to want to reach deep down. Okay, as you can see, it reached into this 1 minute under block right there, then starts to move away. Okay, so this right here is another opportunity to get in. This right here is another opportunity to get in. Then your stop loss will be below here. Okay, so we're going to talk about re-entries in the mentorship. Okay, so now here will be my target. My target obviously was here. Okay, my target obviously was this fair value gap. Okay, so I want you to also take a look. Notice how although this had not happened, although this equal highs had not happened at the time of taking this trade. Okay, this equal highs has not happened yet at the time of taking this trade, but notice how after it had happened, after it had eventually played out, notice how liquidity was being engineered right at the equilibrium. Each highs of this candle failed to go above the equilibrium, although it went a little bit into discount, into premium, sorry, but it was not much of a movement. Okay, although it wasn't much of a movement, but we still had a level that a potential level that could be reached for, which is the fair value gap, right? So this is my TP. So I got in right here, okay. So I got in right here, zooming it out, okay. That was there, and my exit, which is my TP, was here, okay. So this is where re-entries and trailing your stop loss to avoid getting stop out, this is where it will come in handy, okay. And I'm going to talk about that in the mentorship, okay. So obviously I had more entries, in as it was going up, as it was moving towards that. This alone gave me an overall target, okay. But as it was moving in, I was scaling my stop loss and I was including more entries, okay. I didn't share this in the group, but the second one I took, I shared it with the group in our Telegram group, okay. So now I want you to look at the risk to reward ratio, okay. Look at that. That's 25-to-1 risk reward ratio from just a single setup, okay. From just a single setup, we had a whooping sum of risk reward ratio of 25-to-1, okay. So that is how awesome this is, okay. So I like, managing my trades or managing my risk using the concept of a risk to reward ratio, okay. So let's go down to our main bias setup, okay, which is bearish, okay. So we are bearish and price, as you can see, reached into that fair value gap. So zoom, this is on a 5 minute time frame, okay. So what am I looking for? What's price reached into my point of interest, okay. I'm obviously looking for a shift in market structure, okay. So now we have zoom, this is same price action zoomed in, okay. So now price, this is the fair value gap, the lower end of the fair value gap, is price traded into that fair value gap, the hourly fair value gap, right? And now I'm looking for an indication that the trend is about to change, okay. So I have to see a shift in market structure, okay. So now we had a market that expanded up, right, then created a short-term high, made a short-term retracement, then broke up, run buy side liquidity. So this is buy side liquidity being pushed right there. Then this became our new low, our new swing low. So the swing low moved from the one below here, okay, to this. So this became our new range, sorry. So now as you can see, this is a shift in market structure. So we had this shift in market structure right there, okay. So price shifted in structure. Is there a fair value gap on this? Yes, look at it right here. Can you see that? That's our fair value gap. Is there an order block? Yes. So the order blocks normally starts from the open to the low of the candle, okay. So this from the open to the low of the candle is what defines your order block, okay. So as you can see, price trades into it, at the same time trades into a fair value gap right there, 5 minute fair value gap. And is it in the premium side? Is it in this premium section? Yes, we're in premium. Look at the range from this high to this low, okay. We're in premium, that's premium. So there are the two types of entries like I talked about that can be used here are aggressive entry and lower time frame confirmation entry, okay. So if you are a kind of aggressive trader, this will be your entry and your stop loss will be above here, okay. So that will look like this. So this will be your entry right there, above there. You can enter on that candle, and your what's it called, your stop loss can be above the order block, just above here or above the swing high, okay, depending on your risk management, okay, depending on your risk management, okay. So your stop loss can be above here or above there, okay. So that will be your entry for aggressive traders. Then for a lower time frame confirmation entry, we have to go down into the 1 minute time frame, okay. So let's see how that goes. Now these are the same levels on the 5 minute time frame. That starts run on buy side liquidity, and that's the shift in market structure on the 5 minute time frame, okay. So now this is that fair value gap on the 5 minute time frame, and this is the opening of the order 5 minute order block right there, okay. So now price shifted in structure, so this is our range, right, from this high to this low, okay. So now price starts to retrace. So we had an expansion and retracement. So now as price starts to retrace, this will become, for a shift in market structure, this would have been our low. This is the first low we had, right. Then price reached into the fair value gap right there, made an indication to go down, then made another higher high. So the low that created this high was this. So this became our new swing low, right. This became our new short-term low. So and at the same time price reached into that 5 minute order block. So these are all confluence, okay. Like I mentioned earlier, the more confluence you have on your setups, the more reliable that setup is, okay. So now price shifted structure on the 1 minute time frame, okay. So this is something else that some students used to ask me a lot, okay, what if we have a situation whereby we have a fair value gap right here, and another fair value gap, another fair value gap, and another fair value gap. Okay, as you can see, we have multiple fair value gap in one single price leg. Okay, so prior to this low forming coming in, okay, so I will tell you why I did not take this. I didn't take this entry. Okay, I didn't take this. So why did I take the entry? Okay, now prior to this short term low, new low being formed here, if you look at our range from this high to this low, price didn't reach into premium. Okay, so I'm selling at premium, it was still very much in discount. Okay, so now that is how you filter your trade. Okay, that's how you filter your trade. The best way to do that is that I looked at the whole range. Okay, even if price creates a new price leg lower like this, just as it did, and this would have been a new range to some people, they will say, okay, this is a break of structure and this is my new range, I'm going to enter here and my stop loss is going to enter here. If you do that, that's criteria, of your setup being met. Okay, it makes logic sense that to some traders to enter there, but most of the time I don't do that. As a newbie, I used to do it. Okay, I used to do this when I see a new price leg, but what I'm thinking now is that if price fails to move back into premium, okay, as it should, I'm still looking at this as a single price leg, even though if it keeps on making lower lows without moving back into premium of this range. What I'm seeing now is liquidity being built above these highs. Okay, so I'm thinking the liquidity, the highs that we're having right here, as you can see, this swing highs, liquidity is going to be taken out. Okay, liquidity is going to be tapped into one way or the other. It always does that. Okay, I've seen it several times. I've seen something like this several times. So whenever I see price failing to come back into premium, I'm just not interested in this setup. Okay, so I was not interested in this. Okay, now that does answering the question of how do you filter your fair value gaps. Okay, you filter your fair value gaps by looking for the ones in the premium sector if you are selling, and looking for the ones in your discount sector if you are buying. Okay, so from this range to this low, price made this, but I was not interested. Okay, I was more interested in the retracement that's going to go into premium. Okay, so now it created this new low. So if I had entered here, I would have gotten stopped at 10, created this new low. So what I did was that I adjusted so when it started retracing, I adjusted my fib to my new range. So this is my new range. Now, as you can see, I'm now interested in this. So I'm interested in this, but my stop loss is going to be above this other fair value gap. Okay, so my stop loss was above this other fair value gap because I'm giving room for it if price decides to reach into this other one right here. Okay, so I have the fair value gap and I have the last up close candle, which is an order block right here. Okay, so I'm using my stop here. Okay, so now I got in right there and my stop loss was above that. Okay, so that is just how you filter your trade. Now, where will be your TP level? Your TP level is obviously going to be the first reasonable level to take for your TP is the low of this range that went up into that fair value gap. Okay, so let me show us on the higher time frame how the range I'm talking about. Okay, so in cases like this, the most reasonable level to use as a TP is this level right here, this level right here. Okay, this could be your first TP. Okay, this should be your first TP because this is the most recent low that traded up into that fair value gap. Okay, so we are going to be aiming for the external liquidity resting below there. Then the next level is going to be this low. Okay, because if we are going to be bullish, watch hard, we have this they are relatively equal, right? So because if we are going to be bearish, the price has to trade below the opening price on Monday. Okay, so it makes logic sense that you should aim for a low below the opening price if you are bearish. Okay, so mind you, I was expecting price to be drawn to this level. Okay, so now we have multiple TP level. We have TP1, TP2, and TP3. Okay, so obviously basic so let's see how many risk reward ratio there was. That's 23 to 1 risk reward ratio. Okay, the first trade we had was 20, but over 25. Then the second one we had was 23. Okay, so this is just the secret to having high risk to reward ratios. Probably there are more to these setups okay, there's more confluence to this setup that I just shared. Okay, there are other things I have to consider. but for the sake of this video, this is just this is just the review I wanted to show to us. Okay, this was not the only trade I took. This was not the only pair I traded. I traded GBP USD, I traded Australia USD, I traded New Zealand USD, I traded USD card, and the rest. Okay, so which is what I'm going to be sharing with us. I'm going to share the deep parts of how to capture this kind of moves with us on the mentorship. Okay, so the mentorship program is valid this month. Okay, so after this month I'm going to take it down, and that is it. Okay, so basically if you are interested, click on the description box, the link is there. Click on the link and let's get you started. Okay, people are already signing up, and trust me, you don't want to be left behind. Okay, so that will be the end of this class. Until next time, have a great trading week ahead, and I will see you guys in the next video.